It is 11:30 a.m. here in New York City. Happy Fed Day to all of you out there. We are 2 hours into the trading day. Stocks are up. You see the Dow, the S&P, the NASDAQ, all in the green as investors position ahead of news from Fed Chair Jerome Powell and the Federal Open Markets Committee. We've also got European markets closing just moments ago. London's FTSE, you see they're closed just in the red, but you got the DAX out of Frankfurt, the CAC out of Paris, both ending on the upside. Let's make a deal. After being outbid, Fox sells its stake in Sky to Comcast. Tech takes the hill. Lawmakers grill the likes of Apple and Google over privacy. And the state of the IPO. SurveyMonkey is poised to hit the market and Lyft is testing the waters. Welcome to Midday Movers. I'm Dion Raboa.
And I'm Shauna Smith. And now to our top story of the day, and that is 21st Century Fox has agreed to sell its remaining stake in Sky News to Comcast. Now, this comes just days after Comcast outbid Fox for Sky in a takeover auction. So Fox issued the following statement saying, in part, the decision comes in light of the premium Comcast agreed to pay for Sky. And they congratulate Comcast on their pending deal. So let's bring in today's panel. We have Yahoo Finance Editor-in-Chief Andy Serwer. We also have David Nelson of Bell Point Asset Management. Thank you both for being here today. Andy, we talked about Comcast's $40 billion bid for Sky back on Monday. We saw the reaction in Comcast stock. It was down almost 7%. Today, though, it seemed like shareholders are taking this news a little bit better. Why is that? Do you think that they were just largely expecting this to happen?
Absolutely right. They're either expecting it and or the fact that they're doing it and getting the whole enchilada is a positive thing. It's interesting. I guess what you have to see here is that Disney let the auction set the price. They always wanted to get rid of the whole thing, but they let the auction set the price. They said, now that we have the price, we'll let the whole thing go to you. And so maybe, it also means that they'll own this thing unencumbered. And so that's even more positive news. Also could be a bit of a snapback for Comcast as well today.
Yeah, David, do you think that this is a strategic buy here for Comcast? Why do you think Brian Roberts sees value in Sky?
I think they were the only natural buyer. They needed Comcast probably more than anybody else, and that's why the price came in as high as it is. They need the international presence. Disney certainly has that. So certainly they would have liked to have Sky, but they're going to be a strong international firm no matter what. 21st Century Fox, those assets there, I thought those were the crown jewels, but it's still a good move for Comcast, but I think it was the only move they could make.
And with the media landscape shaping up as it is, we're seeing more and more M&A. Do you think we're going to see another big deal in this media space?
I would think so. Content is king. It's all about content. It's not just the pipes anymore. You got to have it. And we saw that all the way back when Comcast first wanted to take out Disney. Think how many years ago that was. They realized, they saw the handwriting on the wall, that the pipe was going away, that wasn't going to be the premium product. They need the content, and that's why HBO and other entities and other content went so high.
Yeah, and the other thing you didn't name there, Netflix. It seems like everyone's trying to chase Netflix, Andy. What do you think? Where do you think we are now in the positioning battle? David thinks we're going to see another big M&A deal. Do you think we will, and where do you think that puts us in terms of moving forward?
Well, if you look at the telcos and the cable companies, very tough to grow in that business. And so not only are you marrying the content with the distribution, as David says, but you also have a growth vehicle because you're just not going to grow domestically in cable or telecom, right? So that becomes a part of it. With Netflix, of course, they've gone from acquired to acquiree potentially. Yeah. I mean, there's still companies that could buy them. Apple, there's always, these rumors go around all the time. I think Reed Hastings is very intent still on building that company independently, and I think that there's still a lot of room to grow, particularly internationally. They're making a big push there. It's getting a little late in the game. I see a lot of consolidation, happening, but, bull market top kind of thing, right?
We know years ago there was talk that Disney could buy Netflix. Obviously, that would never happen now. So as Netflix gets bigger, it's going to be harder and harder for anyone to ever acquire that.
I've been 180 degrees wrong on Netflix at this point. I believe the business model still can be duplicated. I grant you they have a huge head start, but the amount of money that they're spending on content and the fact that their debt levels, the only thing that grows faster than their sales is their level of debt.
Yeah.
I don't disagree with you at all. I've always sort of scratched my head over that, David, and been wrong year after year, month after month. But, it's a huge, huge bull market in content right now, and it's not going to end well for everybody.
And
I guarantee you
Andy,
that.
it's not just a bull market in content, it's also a bull market in the market. We've got stocks trading higher as investors await the Federal Reserve's decision on interest rates this afternoon. Economists expect the Fed to raise rates for the third time this year, pushing the Fed funds rate to its highest level in more than a decade, back to April 2008, as the U.S. Central Bank works to keep a lid on inflation. So I want to turn to you guys. We're looking at the Fed. David, want to go to you first here.
Sure.
What are you thinking about and expecting from Fed Chair Jay Powell today?
This is not going to be a big surprise today. It's a lock that there's going to be a 25 basis point hike, and everybody's expecting one more this year. And if you look at consensus, we're looking at three next year. The only conversation I'm hearing is about the word accommodative. Is that going to be in there? Could that be pulled? I think the problem for investors like myself and everybody out there is that we're always concerned that the Fed is going to make a policy mistake.
Right.
And the problem they have is the tools they use are blunt instruments, and they're trying to move around a battleship, the U.S. economy. So it takes very long to get policy implemented and even longer to unwind it. And the fear is that they're going to trigger too soon to clamp down on this economy before we can really get it going into the out years.
Andy, how big of a deal do you think will be made about the Fed's outlook? We know that we have trade. Obviously, the big question is how that will impact not only the U.S. economy, but the global economy. So what do you expect Jay Powell and the Fed to say about outlook?
I see very little difference. I mean, you may get a little more measured response and conversation about that trade, like there's slight headwinds and need to watch that a little bit. But basically, this is this whole tension, Sean, about, is it a global view of theirs or domestic?
Yeah,
and
see
it's
the chart there
domestic.
on the screen.
Right, and that's it. It's domestic, but that includes some international because, of course, we're a part of the international is a part of our economy. The interesting thing, too, I think about the rate, the Fed funds rate, and going to the band of 2% to 2.25 is that we're right now at April 2008. That was the very beginning when they started to cut because of the financial crisis at that point. So we're all the way back there. And I think the Fed is catching up a little bit, which is good because you'd rather have them catching up a little bit than being too far ahead.
Yeah, absolutely. And David, to that, some people say that the Fed is behind the curve, they're behind the 8 ball, that they really need to start speeding up.
Yeah.
Some people say that their intent, that they're laying out their rate hike path is too far ahead. What do you think as an investor?
I've been wrong. I've been a big critic of the Fed in the past, but I think Jay Powell and company, I think they're handling this pretty well. And to Andy's point, he touched on international. That's really the issue here. If there's a black swan out there living, it lives in the emerging markets. And my concern is that higher interest rates here, higher short end of the curve here means, a very costly dollar-denominated debt. It's going to hurt these companies, and it has been hurting these companies. In the end, these are our customers. This is who we sell to. So if they get hurt, eventually it hits the top and bottom line of our companies here.
And also a big focus will be on wages, and just in terms of we've seen wages tick up just a little bit here, but the question is whether that's in the forms of bonuses or if people are actually getting salary increases, and then in terms of what that would mean for the Fed's future policy as well, Andy.
Yeah, and wages are still behind, Sean. I mean, no question about that. I mean, we're starting to see some positive stuff there. My take on this, of course, is that technology is the greatest deflationary force of our time and will continue to be. I mean, it just makes everything less and less expensive and keeps a lid on prices and keeps a lid on wages over and over and over. But, having said that, we're seeing labor shortages around the country. And, particularly heading into the holiday season, we're hearing about companies having a really tough time getting seasonal workers. I mean, you got to pay people more, and so I think we're going to start to see that.
And this is the price that we pay for a robust economy. Is the Fed weighing in on the other side of that? So, look, there's good and bad here, for sure.
Yeah, and again, we'll have the Fed decision out at 2 p.m. and then the press conference gets underway right at 2:30. Well, the Fed decision isn't the only thing that's happening down in D.C. today. America's top tech companies are back on Capitol Hill. Lawmakers are weighing federal privacy legislation that could have a major impact on the future of Silicon Valley. Dan Halley is live in our newsroom. And Dan, we are looking at live pictures of the testimony underway right now on Capitol Hill. It's been going on for about an hour and a half, started right after 10 a.m. Eastern time. Have we heard anything surprising so far? What's the latest?
Nothing really surprising. I feel like watching it is like taking an Ambien. It's basically the incredibly boring. They're essentially feeling each other out at this point. The senators are asking, hey, do you think that we need federal privacy legislation? And all the companies are like, yeah, probably. That would be a good idea. It's interesting, though, because the senators want this because consumers don't feel like their privacy is being protected properly by these companies. And the companies want it because they want to protect against each state having its own kind of privacy regulation, which would mean that they would have to have 50 different kinds of laws that they would have to follow and then build out products to. So this is mostly about them kind of saving money and fighting off having to deal with multiple laws, whereas the senators just want to kind of protect the actual
I'd like to just
people.
weigh in and just ask a quick question. Given the fact that we saw Facebook and the fiasco at Google recently, it's not surprising that we're getting this kind of testimony and we're getting this, congressional leaders weighing in on this. How confident are we that they're going to even ask the right questions? I look at some of these people out there, I'm not even sure that they're surfing the internet or know how to use their email properly. And the questions that I've seen asked in here have been usually grandstanding plays by congressional leaders. So I'm not confident that we're going to get anything out of this.
I mean, that's become a meme, when Orrin Hatch asked Mark Zuckerberg, how do you make money if it's a free platform, seemingly not having a clue. And, in a story in the New Yorker, that response by Zuckerberg at Facebook, they were going to make T-shirts and hand it out at the company.
Ads?
Yeah, we sell ads, Senator. So I want to ask Callie something. Dan, these guys keep getting asked to come and appear before Congress. Should they just set up offices there? I mean, they have lobbying offices, but in other words, how long is this going to continue?
So this is actually one of the first hearings that they're going to have. They're going to have multiple versions of this with different people coming and going. Right now, it's the heads of privacy. One senator asked about, Russian interference using consumers' data to make ads or, misrepresent themselves as actual consumers. So this is going to keep going forward. It took a while for the EU to get the GDPR together. California's law came together a lot faster. And so, I think a lot of these tech companies didn't like seeing what California's law had to offer, and they don't want to see the U.S. wholesale adopt the GDPR. So they kind of want to have their own foot in the door and say, hey, whoa, why don't we get a say in this too? And it looks like that's kind of how it's going right now.
All right, Dan, thanks so much and we will continue to watch this. Again, the hearing is underway and is expected to continue here for a couple of hours. Thanks so much.
Thank you.
All right, let's take a look now at the markets. We've got Alan Valdes of Silverbear Capital on the floor of the New York Stock Exchange.
Silverbear.
Got the Silverbear. It's always great having you, Alan.
Thanks for having me.
Hey, it's always great. Like I said, the U.S. dollar is strengthening ahead of the big Fed decision this afternoon. With the turmoil that we've been seeing in emerging markets recently, what are the risks to global markets of a big move up in the U.S. dollar?
Yeah, well, the emerging markets are going to, every time we go up, the Feds are going to speak later on. We're probably going to hear they're going to raise twice, 2 more times this year. And that, of course, is going to hurt the emerging market currencies. And it's definitely, they're going to take a hit. We're seeing it now in a lot of these emerging markets. So it's no surprise. And you hate to see that, but, the Fed has a mandate, and they have to take care of the U.S. economy, the cold, hard facts, before they can really take care of emerging markets, unfortunately. It's that simple.
And Alan, we're seeing a rotation out of tech stocks so far this month. We have Apple, Google, Twitter, others testifying in front of Congress today, like we were just talking to Dan Howley about. What's your outlook for tech stocks here heading into the fourth quarter? Do you think we could see some sort of rebound here in the sector?
Yeah, every time they talk in front of Congress, a lot of times, like they said, some of these guys say something, it sells off a little of the stock. But here at Silverbear, we look at the long term. We look at demographics. And if you look at Apple or Facebook, those companies are here for the long term. You may see some fluctuation right in here now because they are up. Why not take some money off the table? If you look at earnings, the new earnings season's right around the bend. If you look at the earnings season, it could be a little weaker than we think this quarter. So you might see people taking money off the table. And where do you go? Where you made the most, in the tech sector. So I could see them selling off here. But I think in the long run, we're buyers in the tech sector, to be honest and totally transparent. So we still like the tech sector. But overall, I think it's a great sector to be in. And I'm in it for the long term.
All right, the Silverbear seeing some buying opportunities maybe on the horizon.
No
Alan
question
Valdes,
about it.
thank you so much.
Thank you. Have a great day.
All right, well, coming up, hailing an IPO, why Lyft may be Uber to Wall Street, plus a $2 billion problem. Salesforce's Grand Central of the West is shutting down just 1 month after opening. We'll be back with the details right after this break.
The Yahoo Finance app does more for your money. Track market moves and understand why. Keep an eye on the stocks and companies that matter to you. Get exclusive access to events featuring thought leaders and market makers. And now, make trades directly in the app. It's the essential financial tool, and it's powered by the #1 site in finance. Don't just work for your money, make your money work for you. Download the Yahoo Finance app today.
Newsroom redefines your newsfeed. Watch the top stories as they unfold. And get videos that matter to you. With coverage from every angle. See outside your bubble with hard-hitting reporting. Connect with people on stories that move you. Catch the buzz. And join the conversation. News worth sharing. Download Newsroom today.
Introducing the Yahoo Sports app. Need a sports fix on the go? Live games and highlights keep you closer to the game than ever before. Bleed silver and black and green and blue? Follow all the teams you love in one place. Want to become an even bigger fan? Follow live plays and scoring updates. Never miss a moment of the game. Game on. Download the Yahoo Sports app now.
Welcome back to Midday Movers. You've got the markets there on your screen. The Dow up about 50 points, the S&P and the NASDAQ all in the green. The economy keeps humming along. We got inline housing data today, but there could be some warning signs on the horizon. Joining us now to talk about what to look out for is Head of Capital Markets Research at John Hancock, Emily Rowland. Emily, thanks so much for being with us.
Thanks for having me.
It's great to have you here. So I want to start first. We've been talking a little bit about tech, and you say that John Hancock there, you all are overweight on the tech sector, but you also say that big tech firms have something to fear when it comes to the possibilities of regulation from Washington, as well as this trade war that the president has been engaging in with China. Tell me why you're bullish on tech despite these headwinds.
Yeah, sure. Great question, and a little refreshing not to be talking about the Fed right now, obviously. I'm sure we'll get there, right?
Oh, we'll get there.
It's Fed Day. We're all excited, aren't we?
Happy Fed Day, by the way.
Yeah, it's same to you. I said that to some of my friends, and they just didn't understand.
Yeah, you got to be pretty wonky to celebrate that.
So technology. So I hate to be sort of on the fence here on technology, but there's a couple of different things going on. When we look across the board at different sectors, one of the most important elements that we look at is where the earnings estimates are going forward, right? And when we look over the next 4 to 5 quarters, actually what we've seen is that earnings estimates for technology companies, while still good, are actually coming in a little bit lower than they are for the S&P 500. So there's now a lower bar for technology companies. You see other sectors, particularly on the value side, financials, energy, actually coming in meaningfully above the S&P 500. The reason that I have a little caution, though, about betting against tech is we're probably in the later innings of this economic cycle, right? And when you think about late cycle dynamics and you look at the factors that tend to outperform, it is momentum all the way, right? And you want to ride that momentum to the top, and guess what the biggest component of momentum is right now?
So,
Technology.
not all tech stocks are created equal, though, Emily. I mean, we always sort of lump them together, the FANGs, but, Facebook is very different from Apple. Do you guys really distinguish and differentiate between them?
We do, and certainly our portfolio managers are the ones that do that job. And when I look across the board, we have a multi-manager lineup at John Hancock, and when I look across the board at all of our equity portfolio managers, they own technology in a pretty big way. That does vary across the different names. We don't comment specifically on those names, the PMs do, but there's a meaningful overweight there.
Emily, do you think it's time to get, since you're saying that we are starting to enter the late stages of this economic cycle, is it time to position your portfolios in order to be more defensive?
So it's a great question. We are moving there at the margin. So last quarter, we reduced our allocation to non-U.S. equities and emerging market equities. We took those proceeds and marginally put them into more defensive assets, duration, mortgage-backed securities, but we still think that there's another leg up here in terms of U.S. economic growth. The economy continues to accelerate. Earnings estimates continue to come in higher. We're looking at 20% earnings growth for Q3, potentially another double-digit earnings year next year. So there's some positive tailwinds that we think really can't be ignored at this point.
Yeah, but Emily, you talked about this in one of your notes. You said, the U.S. can't carry the globe forever. And I think one of the things you said was the global growth story is behind us. This was the big thing admit, I was at the IMF meetings last year. They were Christine Lagarde and all those folks were really excited about this synchronized global growth story. You think that's over? And if so, I mean, how long can the U.S. really carry the mantle of all of GDP growth?
Yeah, it's a great question. And we've been noting the fact that that big story last year of synchronized global growth really has gone away. As I mentioned, the U.S. economy is continuing to accelerate. We're really not seeing the same thing overseas, right? We're seeing economic growth sort of step down a gear overseas. One of the things we love to watch are PMIs, Purchasing Managers Index. It's a survey of manufacturing firms. Anything above 50 is expansionary, anything below 50 is contractionary.
Thank you for explaining that.
We're kind of hanging in there right in those low 50s. I think Italy's at 50.1 right now. So it's okay, but we're really not seeing the same level of acceleration that we've seen in the U.S. And not all of that is actually due to trade.
Can I be the Fed guy?
Yes.
Do it.
You want to get in on the Fed?
I mean, yeah. So with rates going up, Emily, no doubt, I mean, we're just part of this secular trend right now. So what does that mean for investors? What should they do? How should they position themselves?
Yeah, sure. So obviously rates are ticking higher. We're waiting to see if we can kind of break through that psychologically important 311, 312 on the 10-year. I know we've all been watching it today. I think we're seeing a little bit of a pause ahead of that 2 o'clock Fed meeting, but that's going to be incredibly important for the direction that rates go. We actually don't think that you're going to see rates really move significantly higher. And one of the reasons for that is that we're really not seeing a major acceleration in inflation. So obviously the Fed's most important gauges that they look at are unemployment. We're there, right? Unemployment's at 20-year lows. But inflation, actually, there's a lot of headlines around how that 12-month rate of inflation is moving higher. So the Fed's preferred measure of inflation is core PCE, and their target's 2%, right? And we've kind of met that target. But if you actually look at the shorter term trends in inflation, you look at 3-month inflation annualized, we're actually seeing that roll over a bit. I'm not saying we're in for disinflationary environment, but we just don't see inflation taking off. So we think the Fed's going to move slowly.
I agree with you 100%. You know me, I'm like, I just don't see that.
Well, that's no fun. We should argue.
Sorry, I'm going to argue. Well, we'll find some
And by the way, happy Fed Day to you too. I didn't wish you happy Fed Day. Emily, you said you didn't want to talk about the Fed, but you got in there on
I
the
love
Fed.
it.
You love it. I love it too. Emily Rowland, thank you so much for being with us.
All right, well, Salesforce and Apple announcing a new partnership. Salesforce customers can now use Siri to enable mobile apps, and in return, the customer service giant will create specialized features for Apple devices. Yahoo Finance senior correspondent JP Magna-Linden has the latest. And JP, when I first read this deal, it was a little confusing. From your perspective, I know you closely cover Silicon Valley out in California. Do you think that this is a strategic deal for both Apple and Salesforce?
Oh, absolutely, especially for Salesforce, right? The timing is very, very good. Apple just announced its new iPhone and new Apple Watch a few weeks ago. So Salesforce is riding that wave from a news perspective. But I think what's most interesting here is, and Mark Benioff gave a little bit of an example where he hinted at the possibilities. One example being Marriott, for example, is currently a Salesforce client. Imagine the possibilities if I'm an iPhone user, I'm staying at a Marriott hotel, and I want to interact. I want to use Siri to engage more with the features in my hotel. What Mark Benioff is saying, or at least promising, is the idea of going into your hotel room and saying, hey, Siri, please turn down or turn up the lights, or hey, Siri, I'm starving. Get me a sandwich. And what Mark Benioff is promising is that Siri will work closely with Salesforce's Einstein AI platform to dive into its customer database of information to work closely with Marriott to make those kinds of requests happen.
Yeah, and JP, you know, I hear about Einstein, the AI for Salesforce. I hear about Siri. This sounds to me like a whole lot of branding, but not a whole lot of substance. But what is your take on it?
I think you're right, Dion. You know, Benioff rattled off these features during one particular interview, but he didn't go into a lot of specifics as to how this technology actually works. I mean, obviously, a lot of this is going on in the back end, but again, he doesn't go into a lot of details. And actually, the Marriott details were not part of the major announcement with Benioff's keynote. So this is more of a wait and see kind of thing. You know, it could very well end up just being a nice branding sort of splash. But we'll have to wait and see if Salesforce actually brings the goods.
So JP, it's not just Apple, obviously, that Salesforce has a partnership with. Their other well-known, or one of their other well-known partnerships is with Amazon with their AWS. Do you see other strategic partnerships here down the line for Salesforce, and what do you think they could look like?
Yeah, absolutely. You mentioned Amazon, for example. Voice and artificial intelligence is certainly on top of everyone's minds from a user perspective. From a company perspective, so there's Amazon, AWS. Maybe we could potentially see partnerships down the line with other companies, really heads down on AI, IBM, for example. So again, sort of a wait and see.
Hey, JP, let me just ask you, just give us some context about Dreamforce. I mean, this is this big event that Salesforce has. It's all about Benioff. I hear 170,000 people go to this thing. You can't get a hotel room in San Francisco. This is a boring software company. I mean, how does Mark Benioff do this? What's this all about?
Honestly, I think Dreamforce, and you're right, Andy, it's huge. I mean, it's 171,000, I think Benioff said at the last count. Yeah. So just 1,000 more. But honestly, I mean, this is a promotional vehicle for Salesforce, which has basically taken over all of San Francisco. I mean, it's an opportunity for Salesforce to connect more with clients and people who are using their various apps. It's a way to promote Salesforce locally even further. Yeah, very much more along that line.
Okay,
I don't think we'll see a lot of earth-shattering announcements this week.
All right, JP, thank you so much for all of that. So, guys, I also want to talk about, Andy, I know we have been on the show together before, and we've talked about how Mark Benioff really wants to get his name out there, how he wants to be a more well-known figure there in Silicon Valley. Well, this is interesting. So Salesforce is also in the news with its new transit hub in San Francisco. It actually was closed for safety reasons over a cracked beam. Now, this is something that cost $2 billion, and about thousands and thousands, I think they said 100,000 people go through this transit hub every day. And I mean, for someone who wants to get their name out there, this might not be the most strategic way to do this.
Yeah, I mean, I do think that Mark is the consummate salesman. I mean, he really is. He wants.
He's a Salesforce.
Yeah, exactly. I mean, he's a larger than life character, literally. I mean, the guy's like 6'5", 250. Maybe you're not that big, Mark, but I mean, he's a big man.
We're gonna get emails.
No, he's a big guy.
He is a big guy.
He's a big guy, and he wants to be world famous. He already maybe is, and he has done a lot of philanthropic things, and given a lot back to the city, and has this huge building and built this terminal and done a lot for the hospitals and schools. And so, this is a sort of a timeless historical, figure trying to make himself to be a
timeless historical figure.
Exactly.
Hey, what do you think when you see news like this that comes out? Does that make you have some doubts about Salesforce, about Jack Benioff?
I'm probably the last guy to ask about Mark Benioff. I've written some pretty scathing articles, even for Yahoo Finance, on the stock options compensation programs that the company has run.
Yeah.
But I can't argue with success, and I'm actually a shareholder in the company right now. They are the leader in cloud and will continue to be so. And these strategic partnerships that you're seeing them make with Apple, that's just the beginning. You're going to see a lot more.
Wow, a big 180. I like to see.
Yeah, that's good. But when you get new data, you change your mind.
Exactly. Well, if you're a smart investor, you do.
Yeah.
All right. Hey, JP Mengelingen and Andy Serworth, thank you so much for joining us.
Thank you.
Coming up, Powell takes the stage. Investors ready their trades ahead of this afternoon's rate decision and press conference from the Fed chair. Plus, bringing the blockchain to the supermarket. Walmart teams with IBM to simplify the supply chain. We'll be right back.
We'll be stars until the morning comes.
Welcome to the first Yahoo Finance All Markets Summit.
Individual investors have to stay invested.
The markets are really a reflection of how well our company's doing in managing through those macro trends.
We are re-examining our stance on gambling.
The only difference I see in crypto is that there's a public marker of the volatility.
We're having a hard time figuring out, how it applies in the 21st century, given that we're applying 20th century law.
We're live streaming this event all across the world.
We let them know how much risk they can afford to take.
To a true entrepreneur, that doesn't matter. We've always had uncertainty.
Cryptocurrency is here to stay. Are you ready for the future? The Yahoo Finance app. Enhanced coverage for the crypto curious. Crypto Decrypted. Download now.
Well, it's noon here in New York City. We are almost 3 hours into the trading day. Stocks posting gains with the Dow up 51 points. IBM, Disney, and Walgreens are the Dow's top performers. The S&P and the Nasdaq are also holding on to gains. Well, here comes the Fed. Investors are awaiting a decision on interest rates just 2 hours from now. And Nike cashes in. The company says its ad with embattled quarterback Colin Kaepernick drove record engagement. And dropping the donut, the shocking price Dunkin' is investing in changing its name. Welcome back to Midday Movers. I'm Shauna Smith.
And I'm Dion Rabowen. We are 2 hours away from the Federal Reserve's rate decision and a press conference from Fed Chair Jay Powell. The central bank is expected to raise rates for the third time this year to their highest level in more than a decade. Joining us on the phone is Yahoo Finance reporter Miles Udland. Miles, what are you expecting to hear from Jay Powell and to see from the FOMC today?
Hey, Dion, how you doing? So I think the main thing that investors are going to be looking for today is we get a first look at the Fed's forecast for 2021. So that's going to give us a sense of how long the Fed thinks this expansion is going to go on. We'll get a look at their unemployment rate, their GDP growth projection, their inflation expectations for 3 years from now. So I think that'll really give investors a sense of how far out the Fed sees the economy expanding. And then I expect Powell to get a lot of questions on the unemployment rate difference right now between what it is, 3.8%, and what the Fed views as the natural rate, or the rate at which we would get 2% inflation and economic growth that's on trend. Right now, that spread is about 0.8 of a percentage point, which is a pretty big number. So I expect them to get a lot of questions on that during the press conference. But as you noted, I think the actual action today, the interest rate hike, is sort of baked in, and then we'll see how the market reacts to that.
Hey, Miles, real quick, we know that the Fed is talking a lot about the risks of it overheating. Down there from who you've been talking with, and I know you covered this very closely, I mean, are you at all expecting maybe the Fed to comment on that, and how do you think that will play into their decision?
Well, I think what's interesting is that Chair Powell started to set up the idea that the Fed is not going to be looking necessarily at the unemployment rate or the inflation target for signs of overheating, but rather would look to financial markets for potential signs of excess. At Jackson Hole, he was talking about how the last two recessions were actually born of the financial sector. We had the tech bubble, of course, and then the housing bubble, and those were not really in the monetary policy realm. Powell himself comes from the private sector. So I'll be interested to see if he gets any questions. Maybe I'll ask him about it, his view on how he thinks financial markets are faring and how attuned the Fed is to potential risks that could be coming out of that space.
All right, Miles Udland, thank you so much for all of that. Well, joining us now, we have Institute of International Finance Senior Director Sonia Gibbs. Sonia, thank you for joining us here. So we have the Fed decision that's going to be out in just under 2 hours from now. Are you expecting any surprises? We've been talking to our previous guests. No one's really expecting anything that will rattle the markets here. What do you think?
It's not so much a surprise as how they're going to approach the outlook for 2019 and 2020. I mean, you have a big dichotomy between people that think, okay, this is a point at which the Fed could be possibly making a policy mistake, tightening too much and slowing the economy too much, and others who worry more about inflation. You know, from our point of view, we're very concerned about turbulence, for example, in emerging markets and elsewhere in the world, the spillover impact that could have on the U.S.
Yeah, and you talk about that. I know you have a global view at the Institute of International Finance. Talk to me about what you're hearing from some bankers and some investors who look out globally or who are in some of these other markets around the world. What are they worried about? What are they hopeful to hear and to see from Chair Powell?
I think the issue is one of divergence, right? The U.S. is kind of going on its own path. The rest of the world, to a greater or lesser extent, isn't following the same kind of strong growth and potential inflationary pressures that we have here in the U.S. So the U.S. sets policy for the U.S., obviously. So, but the impact that's having, particularly in emerging markets, can be very troubling. And we've noticed also that the capital flows to emerging markets have slowed quite a bit in recent months. It's a source of concern.
Sonia, have you noticed any signs of economic stress on the horizon, maybe outside of emerging markets? I mean, how worried are you about the trade dispute that the U.S. is in with a lot of its trade partners, or potentially slowing growth as well?
Well, I think you're already seeing kind of a decline in trade volumes, if you look at global trade volumes. And one concern, I think, is that you get a much more fragmented environment where everybody's kind of going their own way, bilateral trade agreements rather than multilateral. And so it just kind of slows down the flow of finance across borders and ultimately impacts to slow down global growth.
Yeah, and you talked about a slowing of fund flows to some of those emerging markets. As we're seeing this, you talked about, and our guest previously, Emily Rowland from John Hancock, she said that, this global growth story is over. I want to ask you first, do you agree that this global growth story is behind us? And as in addition to that, I mean, what do you think that the worries are as people come close to the Fed? Because there's obviously the liquidity issue of the central bank raising rates.
Mm-hmm. So I think there's certainly a lot of risks on the global growth front, because by any definition, we are late in the cycle here in the U.S. Big question marks over how much further we can push it. And that has implications for the rest of the world in the sense that if you're slowing down trade, if you don't have the giant engine of the U.S. economy cranking as rapidly, you don't have as much of a market for exports from elsewhere. So you do have these risks to global growth. On the liquidity front, it sort of compounds it, and especially, again, for emerging markets. So if you have less liquidity at the same time as you have slowing growth, where is your impetus for growth, especially outside the U.S. in economies that have been struggling, like Japan, for example, for years with subdued growth, for Europe, where they're still working to get growth up to higher levels, and for emerging markets.
So, Sonia, I hear nothing but bad news. I mean, how worried are you? Should people be heading for the exits right now?
So I think by the same token, I don't think you can sort of paint the picture as totally black, right? I mean, especially in the emerging market space, because there's a lot of differences between these countries, right? There are some countries that have domestic difficulties that are making big problems for them, but it's not necessarily the case elsewhere. And there's a lot of progress, for example, on trade agreements within some of the Asian countries that will help them support their growth going forward. Not all black, no.
Okay, all right. I just need to hear some good news from you.
Just to be clear.
All right.
All right, well, Sonia, thank you so much for joining us. Well, the U.S. will be the big loser if it starts a trade war with other countries, while China will be better off after retaliating. Now, this is a harsh warning coming from the European Central Bank, while another unlikely winner in the global trade spat could actually be Brazil. Joining us from the newsroom to shed some light on this is Mylan Studart. And Mylan, I know you wrote a story about this yesterday, and it's all about the Brazilian soybean exports. Talk to us about this and why this could be such a boon for Brazil.
Hi, Shauna. This is fascinating. So the unlikely winner of the trade war with China when it comes to commodities and soybeans is Brazil right now. The United States and Brazil percentage of exports to China is 89%. So they're the biggest markets of China. But now with this trade war, now China is only buying from Brazil and the United States is losing out. Now the United States is the largest producer and Brazil is second. So they have competition. And you have to understand something that's really interesting with the pricing that the trade war is causing, right? Because American soybean prices have gone down so much because China isn't buying from them anymore. And Brazil's prices are going up because of demand, because it's filling the gap that the United States left in China. It's filling that gap. So something really interesting is that Brazil is actually buying cheap soybeans from the United States to sell to China. So, the United States doesn't need to be doing this, but it is, and Brazil's winning.
President Michel Temer at the UN the other day. Talk to me a little bit about what he said and how excited he is about this. Does he think this could be a long-term win for Brazil?
So really interesting. I spoke to the president of Brazil, Michel Temer, a couple days ago when he was speaking to a room full of businessmen, and I asked him about this soybean market, and he said that he already had spoken to President Xi Jinping during a meeting back in July, and he gave him a soybean package, not just the beans themselves, but soybean meal and oil. And guess what? He said that Xi Jinping didn't really do anything with it, but the USDA just came out with numbers that the Brazilian exports of soybeans to China is up 85% in August. So that's a huge climb. That's after a 78% climb in July. So actually, I guess the talk worked out in that meeting in July between President Xi and President Temer.
All right, Mylan, thank you so much for that. Well, the trade war has been a big issue, and here on Yahoo Finance, we have been talking to business leaders, getting their thoughts about the potential impact. Well, earlier on Yahoo Finance, we talked with Beth Ford, CEO and president of Land O'Lakes. She spoke with Alexis Christoforous, and listen to what she had to say about the potential impact of the trade wars.
The export market access has been critical for producers and growers, and taking away that market, taking away that access is challenging. And as you know, when we step out of the market, others come in and try to take the place of the United States in those markets.
All right, I want to bring in our panel. We have Yahoo Finance's Dan Roberts, and David Nelson is still with us. And Dan, I want to go to you first here. I mean, we've been talking about the impact here, the potential fallout, the possibility of unintended consequences in terms of the trade war. If the U.S. scales back and plays this protectionism game, we could see other countries step up like Brazil is doing and take our place.
Absolutely. Look, I thought that ECB report, it was a simulation, which actually made it, in my mind, carry more weight than some of the other random hot takes we've seen about the fact that it's going to be more damaging to the U.S. than China. That came out this morning. I think you talked about it earlier on the show. That was really interesting to me and striking. It's interesting what the Land O'Lakes CEO said, because there are so many parts that you don't think about. I mean, what we love to talk about on our shows is, when will all of this actually hit the average U.S. consumer's wallet? Yes, there have been a few examples. There were the washing machines, but for the most part, the average American isn't thinking as consciously day to day about the tariffs and the trade war as we are at Yahoo Finance. They're not worried yet. When should they be worried? Well, an impact on something like butter, impact of soybeans. It's farmers who are actually feeling it so far. But when will we see it in holiday shopping, you know?
David, go ahead. Sorry.
No, I was going to say, this ECB study we just saw there on the screen showing that the U.S. GDP could be impacted by 2%. I mean, our GDP, which was robust, was only 2.9% over the past year. David, how worried do you think folks should be?
Respectfully, the concept that China's going to win this thing is nonsense. You know, Reuters is out today. There's an article right now. China just blinked. China just blinked. They actually are rolling back their tariffs on manufactured goods and electronic products right now. Even Mohammed El-Arian was just out recently. He's the chief economist for Allianz, saying there's no way China can win this thing. The math simply does not work for them. They import from us $130 billion. They enjoy a huge trade surplus with this country. They turn to the WTO, which classifies them as an emerging market economy. Nonsense. This is the second largest economy in the world. It gives them favored nation status. So the concept that China is going to win this thing, it's not a lot for us to win it, but we got a shot at it. But they do not.
But David, what about so obviously they won't be able to match it in terms of the exports and imports because they don't match up. We export a lot more over to China than we import from them. But the big question, or sorry, the other way around. But the big question, though, is China can retaliate in other ways. They could actually.
Sure they can.
I mean, they could prevent U.S. businesses. We have Apple, other big internet giants.
But they're doing that already.
They could try to do this whole protectionism, nationalism type thing where they start boycotting
We're
some
asking
American
for three
brands.
things. We're asking them to roll back their tariffs, stop the forced transfer of intellectual property, and open up your markets.
Yeah.
The world is moving to a lower
and also
tariff.
reduce the trade balance. So President Trump does seem to be really fixated on that trade balance number.
It's not just the trade balance, it's the transfer of intellectual property like I just said. Look, I think the world gets it. And that speech that you saw at the UN the other day, that was the elephant in the room. The fact that China is the trade bully, the fact that Iran is a terrorist country exporting terrorism. He said what half the people in that chamber wanted to say themselves, but didn't have the guts to do it.
I think half might be a bit overestimating, but all right, Dave.
The United States is not the only country being hurt by China.
This is
a
absolutely
lot of other
true.
countries are being
absolutely
hurt.
true. I think half might be a little much, though. Coming up, Nike cashes in. The brand's gamble on quarterback Colin Kaepernick looks to be paying off. Plus, down in the Delta, passengers are stuck on the tarmac in the airline's latest headache. We'll be right back.
The Yahoo Finance app does more for your money. Track market moves and understand why. Keep an eye on the stocks and companies that matter to you. Get exclusive access to events featuring thought leaders and market makers. And now, make trades directly in the app. It's the essential financial tool, and it's powered by the #1 site in finance. Don't just work for your money, make your money work for you. Download the Yahoo Finance app today.
Newsroom redefines your newsfeed. Watch the top stories as they unfold. And get videos that matter to you. with coverage from every angle. See outside your bubble with hard-hitting reporting. Connect with people on stories that move you. Catch the buzz. And join the conversation. News worth sharing. Download Newsroom today.
Nike says they are cashing in on the Colin Kaepernick campaign. CEO Mark Parker said during the company's earnings call after the bell yesterday that Cap is delivering. The company's revenue rose 9% to $9.9 billion over the last 3 months. However, despite the earnings beat, shares fell and remain down today. David, I want to send this to you. What gives?
Look, I'm not a fan of Nike for doing this or even a fan of Cap in this, but I can read an income statement. And it's pretty clear that this is a very successful campaign on their side. On their side, and it's all about the numbers. So while the market is reacting negatively to this, the expectations were really high coming to this. Everybody got excited. Analysts got excited. They thought the numbers were going to be higher than they were. And very often an earnings report is nothing more than a report card on how good or bad the analysts were at pegging the number. Looks like they missed it this time. I think they're going to be very successful in this.
Yeah, I hope we made clear. The stock dipped after earnings, even though Nike beat on earnings per share, even though it beat on revenue, purely because of profit margins. And they were good, but they were just slightly not as good as expectations. And also Nike shared that its costs have gone up, its expenses, which always makes people a little jittery. But that wasn't a response to the ad campaign, and I think we will see more of the ad campaign impact next quarter. I did think it was interesting but not surprising that Nike said they saw record brand engagement from the ad campaign, which I think if you want to take a sort of the opposite, the sort of other argument, I have heard more people saying engagement, isn't always positive. Engagement just means people talking about the brand. So it's sort of like, regardless of your politics, even if you don't like the ad campaign, even if you don't like Kaepernick, well, of course there's been record engagement. Everyone's talking about it. And so there is a way to view the whole thing, not as, wow, Nike really took a stand on a social issue, but simply Nike knew and made a calculation that doing this would get buzz.
I think Dan hits it right on the head. This was a very calculated move on their part. They understood there was a demographic out there to tap into. They tapped into it, and it's flushing in. It worked out very well for them.
It's important to point out those numbers from the last quarter actually came up too when they started the partnership with Kaepernick.
We really don't know how good or bad this is going to be yet. I suspect it's going to be very successful.
Yeah, because like Dan said, or maybe it was you, David, who said that engagement, it's not always a good thing. They could see some blowback here for Nike, so we're going to get that here with the next quarter. All right, well, let's check in on the market action, see how things are shaping up. We have the Dow still in the green, up about 49 points. Yahoo Finance's Jared Blickery is standing by on the floor of the New York Stock Exchange. Jared, we got to talk about bonds. Yields are backing off today after surging yesterday. Now we have the big Fed decision coming at 2 p.m., so in just under 2 hours here. What are you expecting? What does that mean for the bond market?
Well, in general, I think we could have a surprise break upwards in the 10-year to 3.15%, which would break the May highs and trigger some shorts here because yields are inverse to the actual price of the bonds. Short bonds right now is a crowded position, but the reason I think this would be a fake-out move is because bonds are composed of the real yield, which is currently testing May highs, and the inflation component, the break-evens, which still has another 4 or 5 basis points to reach its May high. So with crude oil on the rise here, pushing up the inflation component, the break-evens, I think we could have a surprise move that fakes people out in bonds, regardless of the decision today. And we're also looking towards the end of the quarter. Again, we're going to see a lot of rebalancing. Wells Fargo expecting $17 billion to be rotated into stocks, from stocks into bonds. So that's going to have a depressing price on the bond yields in general. So, I guess to sum it up, look out for a fake-out move here.
Look out for a fake-out move. That's interesting, Jared. All right. One place that I think investors are also looking for a fake-out move, maybe a top, maybe a bottom, crude oil. It's been volatile this week after the Department of Energy reported a surprise 1.9 million barrel build in oil inventories. But bigger picture, you've got these Iran sanctions. You've got the EU leading an effort to kind of get around these Iran sanctions, continue to do business with the country. What do you think about that, and how could this impact the oil market long term?
I think it's a really big deal that people should be paying attention to. It's drawing criticism from the U.S. government. The way it works is the EU is joining forces, is leading the effort with, and it's going to join with Russia and China to build an SPV, a special purpose vehicle, which would be an opaque entity that could trade with Iran, get around the sanctions, and essentially it'd probably be a barter system, similar to what the Soviets used a long time ago to trade with Iran. So again, it's drawing criticism. Will companies use it? I don't think German companies are going to use it. But if you're Russia, if you're China, you're going to find a way to use it in order to get around the Iran sanctions. And the whole thing could be a negotiation ploy because, again, the Europeans are leading the effort. It's drawing criticism. We're going to see Trump come out against this. And based on the movement of crude oil today, we had what should have been a bearish report. We're seeing a floor on energy prices and them pretty stable. So I think geopolitical tensions are going to be a big tailwind here over the next few days and few weeks with respect to crude oil.
Yeah, it looks like we have oil down about 0.6% so far today. Jared Blickery, thanks so much.
Thank you.
Walmart is betting on blockchain to improve food safety. Now, by this time next year, more than 100 farms that supply the retail giant with leafy greens will be required to input detailed information into a blockchain database. It's going to be developed by IBM for Walmart. Jesse Lund is the Global Vice President of IBM Blockchain. He joins us now, along with Yahoo Finance's Dan Roberts. Jesse, let's start with you here. When most people think of blockchain, they think of Bitcoin, they think of cryptocurrency, not fresh veggies, right? What is it that you are doing with Walmart? Tell us a little bit about your partnership.
Sure, yeah, I'd be happy to. Thanks for having me. So if you think about blockchain, one of the benefits of blockchain is really the ability to manage data across a supply chain or a network of many participants. And so when you think about the supply of fresh foods and the implications of foods not being fresh, this is a perfect use case. And so with Walmart, what we're actually doing is ensuring that food goes from farm to table and can be tracked all the way through that process.
Jesse, you guys have also backed a stablecoin, and stablecoins have kind of come up recently. It's a hot new thing. I feel like in a large way, companies that were getting into blockchain pilots are now starting to eye stablecoins, and it kind of nixes a little bit what was a hot narrative for a while, which was, no Bitcoin, but we like blockchain. We like blockchain without crypto, but now we're getting into stablecoins. Tell us what IBM is doing there.
Yeah, so I think it plays nicely with the evolution of blockchain being this shared distributed ledger, but what it's missing in that initial context and use case is the store of value. And so what I think people are still enamored with cryptocurrencies is the ability to transfer value and to store value, on chain. And with stablecoins, what you're seeing is digital assets that are actually backed by some stabilizing asset that takes the volatility. Yeah, it takes the volatility out of some of the uses.
Jesse, what sets IBM's blockchain apart? IBM has obviously invested a lot of money in this. You see a lot of potential for future growth. What makes sure it's different than other blockchains out there?
Well, IBM's solution is really is based on an investment in platform. It's based on partnerships with our clients, some of the largest banks, financial institutions around the world. It's based on presence and credibility in service delivery all over the world. So I think we have the most coherent, complete execution engine for blockchain of anybody.
We have to talk about price a little bit. The overall market has been way down in 2018. Cryptocurrencies have kind of been getting hammered. Now, obviously, doing blockchain pilots and different businesses eyeing blockchain is a little bit of a separate thing, but it's also related because you kind of get the little bit of reputational damage. Like, I think that the average person, all they see right now is, well, cryptos are getting slammed. Do you deal with that? I mean, when you guys are approaching a big partner like Walmart or a Unilever and you're saying, oh, use blockchain, does the price correction hurt things, or what's your general take there?
No. I think most of our enterprise clients see the value of blockchain not so much in the cryptocurrency space at all, although we are seeing that convergence with store of value on chain. But most are interested in the business benefits, the optimizations that come from integrating networks among different participants. That's the real value of blockchain for our enterprise clients.
Yeah, one thing we talked about was lettuce, right? I think this is the sort of real world use case that you get in here. Talk to me about that story, about how IBM's blockchain could really impact lettuce.
Yeah, so I mean, if you think about the leafy greens, announcement, Walmart is taking one of their segments within food distribution and requiring all of their suppliers to use the blockchain in order to track the from farm to table, so that we can kind of eliminate or help them eliminate things that would normally come from spoiled foods. I mean, diseases, sickness, those kinds of things. There's a real tangible benefit that I think the average public can relate to in this use case.
And really just speaks to, I think, the potential for blockchain really just to solve so many problems across so many different types of industries.
Right.
Yeah, it's not just about Bitcoin mania anymore.
It's definitely not.
Jesse Lund, thanks so much for being with us, and Dan Roberts, we appreciate it.
Thank you.
All right, well, coming up, dropping the donut, Dunkin' brews up a big name change. Plus, is music in your genes? Spotify teams with Ancestry to build your perfect playlist. We'll be right back.
The Yahoo Finance app does more for your money. Track market moves and understand why. Keep an eye on the stocks and companies that matter to you. Get exclusive access to events featuring thought leaders and market makers. And now, make trades directly in the app. It's the essential financial tool, and it's powered by the #1 site in finance. Don't just work for your money, make your money work for you. Download the Yahoo Finance app today.
Newsroom redefines your newsfeed. Watch the top stories as they unfold. And get videos that matter to you. With coverage from every angle. See outside your bubble with hard-hitting reporting. Connect with people on stories that move you. Catch the buzz. And join the conversation. News worth sharing. Download Newsroom today.
Stocks on the move in midday trading. Let's take a look. Fox is selling its 39% stake in Sky to Comcast. Now, this comes after Comcast bid $40 billion for Sky earlier this week, outbidding Fox in a takeover auction. Shares of 21st Century Fox in the green, up about 1.3%. Delta resuming operations today after briefly halting domestic offers due to a technology issue. Now, the ground stop was issued for about an hour. Delta shares rebounding today, up nearly 1%. IBM getting upgraded to buy from neutral at UBS. They're bullish on IBM services and AI businesses. IBM today's big winner in the Dow, up about 2.7%. And CBS has named former Time Warner CEO Richard Parsons as interim chairman. Now, this follows the resignation of former CBS chairman and CEO Les Moonves earlier this month amid sexual misconduct allegations. CBS's stock so far today down about 0.4%. All right, well, now it's time for our buzzer beater round. We've got 3 stories, 1 minute each, so let's get started. First up, Weight Watchers changed its name to WW. Lots of questions about that. Well, now another iconic brand is following suit. Dunkin' Brands is dropping donuts from its name and will now just be called Dunkin'. Dan, I mean, is this really worth it? Is it needed?
No, it's not needed. I mean, it's fine. You know, a lot of people who are making fun of this, then they take the leap that it's going to somehow damage the It doesn't matter, but it's just silly. I mean, as a guy from Boston, you know, Dunkin' is originally this big Massachusetts brand. I love Didi. Everyone I know calls it Didi. Some people call it Dunkin', fine. But our colleague Miles Edlin put it best on one of our other live shows. He said, just because your company has a nickname people use doesn't mean you need to change the official name to match the nickname. It's cool to have a nickname. Let people call it Dunkin'.
Look, we were talking about this on the show. This, I think, is another case of a brand getting burned by an ad agency. Dave, what do you think about this?
This is ad agencies walking in there making millions of dollars to come up with this brilliant idea.
You got to get cool from millennials.
I thought they chose the wrong name. I'd rather see them call it donuts because
Just
that's
donuts?
the only part of it I like.
Well, I think they maybe want the whole wellness part of
They
it.
sell more coffee than donuts. I mean, that is fair. Donuts, they're de-emphasizing donuts.
But I agree with you. I do like the donuts better.
David likes the donuts. All right. Will we soon be listening to our DNA? Spotify is teaming up with website Ancestry.com to create playlists based on your DNA. Ancestry says the service will help people experience their culture. David, does this sound good to you?
You know, I was a recording artist in another life. I can choose my own songs.
What instrument?
What'd you play?
I was the lead guitarist for the Turtles for a lot of years.
Wow.
Interesting. So you don't think you need Spotify?
I don't think I need my DNA or a handover.
What about people who aren't as artistically inclined or naturally talented as yourself, David?
Maybe it's the right thing for them. Gosh, I don't know what. Why would you want to do that?
Well, what would it sound like?
If you know you like the Rolling Stones, you're going to turn on the Rolling Stones. Why do you need help doing that?
But what would it sound like, too? So my ancestry is, you know, I'm a Massachusetts Jew. Like, so is it just going to be Hebrew songs that I hear at Passover? Like, pass,
Maybe.
I'm good.
Maybe you need to get more into
And they already have your like daily playlist based on what you listen to.
You're going to offend people, and the music's going to be bad, and it's just...
Yeah. Well, I mean, again,
know.
it's your ancestry, so maybe it exposed you to some songs you wouldn't have otherwise found.
Maybe.
Well, yeah, I don't know. I'm not sold on the idea yet. All right, moving on. Well, we have all seen this classic meme, the distracted boyfriend meme that went viral. Well, it has been deemed sexist, degrading, and discriminatory by a Swedish ad watchdog. The claim is that the meme objectifies women. I totally see their point. Anyone want to weigh in here?
Yeah, who wants to get fired?
You won't get fired. Look, it's a very popular
dangerous
meme.
territory.
I know. We were talking about this.
It's both. It is probably a little
Yes.
sexist, but the ways in which it's used on the internet are very funny and intelligent and clever.
I thought it was
People slap news headlines on it, but of course the basic meme is the guy is checking out a different girl, which is sexist and offensive.
Yeah.
But it has become a very widespread funny meme.
It's too dangerous to go against this kind of thing. But unfortunately for me, I'm a dangerous guy. And this
There it is.
political correctness off the rails at this point. If we can't look at a girl and roll our eyes a little bit, what kind of a planet?
But I think it's also about taste, what Dan was saying, in terms of if you just take the picture for what it is, it's probably not that offensive.
Yeah,
But
was that
certain
picture
times
really
when they
that
take
bad?
it in,
Honestly,
but
was it
certainly
really
when they
that
take
awful?
it in and put it in different memes, I think you could be crossing the line.
Yeah, I mean, look, I think the moral of the meme is keep your eyes on the road. David Nelson, thank you so much for joining us.
having me.
Dan Roberts. And thank you all out there for joining us. Let's take one last look at the markets. You see there the Dow Jones Industrial Average still in the green. Market's still largely up for the day. We hope that'll keep going. We have the Fed Chair Jerome Powell will be speaking at 2:30. We've got our Fed show coming up, the preview at 2 o'clock, right after the Fed's rate decision. Stick with us for that. I'm Dion Rabowen for Shauna Smith. This has been Midday Movers. Thanks for sticking with us.